Tom Lee said this is an opportunity of a lifetime, and the market right now has pulled back, and there's an opportunity that he sees as a buying opportunity for the rest of 2024 going into 2025. Now, look, I have a very strong opinion on this because I do see a lot of opportunities in the market. However, I do see some stocks that are overvalued, and I do believe they will be falling further. In my opinion, over the past 10 years, what I've seen in this market, what works, what doesn't, and when the market corrects like this, what you should be doing to capitalize. Because it's all about capitalizing. It's all about human emotions. And right now in this market, what I'm seeing is we do indeed have a buying opportunity for two stocks I'm going to cover in this video, while there are a couple other stocks that are overpriced. Listen, I'm going to show you a quick clip. This clip is going to help you understand repricing and what to do in a market pullback, because what I'm seeing right now is a huge opportunity to take advantage of volatility. So watch this quick 90-second clip.
Tom, we'll start with you. I take it you think this is a buying opportunity.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think the fundamental supporting stocks are intact, and I think it's a good opportunity for investors here.
A good opportunity for investors. Jeff, I take it that you feel is differently putting it too strong?
Well, I don't disagree with Tom on the fundamental side of it, but I think if you look at where we're at with the interest rates, what's on the horizon from taxes, tariffs, and deficits, I really have to be considerate of what happened yesterday. It was the second largest move in the VIX we have seen. And historically speaking, Kelly, Tom is right. A month after that spike in the VIX, you see the S&P 500 higher. However, I don't think we can lean on history here due to the fact that we've seen stretched valuations in the top 10 names of the S&P 500. We've also seen just a straight line up. If you look in the last 2 years, back-to-back years of above 25%, we've become conditioned that the market is just going to continue to move higher, thanks by and large to the Fed dovishness in their $7 trillion balance sheet. So I'm looking, I know Tom wants to back up the truck here. I have the truck running, but I'm not ready to back it up yet. I want to see this more process, reset valuations. I think that's going to be the next couple months, possibly the first quarter, because we've become too conditioned, Kelly, to markets repricing in a day. I have to go back to my 30-year career and understand that we will see reset valuations more of a quarter or two, not just a day or two.
All right, guys, so let's go over what we just learned in this clip. Tom Lee said this is a buying opportunity, and I agree completely with Tom Lee, guys. We have been making money hand over fist. We've been pulling in so much profits in this market. We made over 15% in the last month alone. Now we see a little bit of a pullback. So you're thinking to yourself, is it game over? Is this over for the market? Are we going to continue to pull back? I want to tell you, no. We're going to continue to see a bull market. Repricing, short-term, little bit of correction is nothing to worry about, because this is actually healthy for the market. The market can't go up in a straight line, guys. It's not like a complete like this, right? It can't go 1 day, 2 days, 10 days in a row up. What you actually need to happen in the market is a steps and ladder pattern, okay? So you go up in steps, all right? And then boom, you take the elevator down. That is normal. That's exactly what happens in the market. That's the point of volatility. If it was easy, everyone would be rich. That's not how it works. So we want to take advantage of the upward momentum. When it pulls down, like, 3% like we just saw yesterday, we take advantage by buying high quality companies, and we avoid the companies that have, higher risk, the companies that don't have good valuations, the companies that don't have good technicals. This is what you want to look out for. Now, what I saw in this clip, right, specifically is Tom Lee said, hey, this is a buying opportunity. It's business as usual. All right, business as usual. We're making money. Things are going to continue to go up. Now, Jeff Kilburg, he's also a very interesting man. He has a lot of experience. And what he said is he actually disagreed a little bit with Tom Lee. He said that, we're going to see some repricing, and repricing takes some time. In my personal opinion, repricing can take time, but not in this market. The momentum is super clear to me, and 1 day pullback is not going to scare me. 1 day pullback is actually a fantastic opportunity to jump into the market, in my opinion, and I don't really see this as a longer term repricing, as Jeff Kilburg said. So in my opinion, I'm telling you the facts. AMD is at a 52-week low. Guys, are you kidding me? It's at a 52-week low. How much lower can it get? AMD is a fantastic buying opportunity, as well as Nvidia. These are the top two stocks that you should be buying right now. If you're not buying them, you're going to be missing out on a ton of money. AMD at a 52-week low is going to be a fantastic buying opportunity for the 130 call option leap for September 2025. I mentioned this in my last video, and I'm telling you, this opportunity in AMD is going to print money, because I'm not looking at expensive stocks. I don't really like stocks at 52-week highs. What I'm looking at is 52-week lows. So that's where AMD is at right now, as well as NVIDIA. We're not necessarily at a 52-week low for NVIDIA, but NVIDIA has pulled back. And at the price level that I'm seeing it right now, anything under 135 is a fantastic buying opportunity for me. In fact, I think that NVIDIA is easily going to be a $180 stock in the next 6 to 12 months. Both AMD and NVIDIA are fantastic AI plays. Guys, we have heard from Dan Ives that we're at a tech party, right? We're at 10 p.m. and the party's going to 4 a.m. That's what he's famous for saying, right? And I am in full belief that the tech party is still here and we have 25% more growth to have in 2025. Now, obviously, we're at the end of 2024, so there's a little bit of volatility. People are going on holidays and, some folks are selling off on the market. If you sell off on, stocks at 52-week highs and take profit, I can't blame you. That's fine. But if you're selling off and you're panicking from NVIDIA or AMD, that's a huge mistake. And based on my research right here, AMD and NVIDIA are my top 2 plays. However, I will also say Palantir still has opportunities as well, and I'm personally holding my leaps on Palantir. I'm also holding my leaps on Tesla. Both of those stocks are going to continue to do well. So these are my 4 top plays. Now look, when it comes to NVIDIA, I want to point out something super important because some people say NVIDIA is going to pull back further. I will tell you what I'm seeing right now in terms of a floor, okay? This is what I'm referring to as a floor. Floor is basically a support level. Those 2 things are synonyms, floor and support, okay? Now, understanding where floor is, we're at a much lower multiple for NVIDIA versus other AI peers. Guys, this is a relative game. If you want to understand how to actually invest, there's actually no absolute numbers, okay? On an absolute level, yes, NVIDIA has, good PE ratio, but it's all about what is it compared to others in this market. That's what we want to understand on a deeper level. And when I look at AI peers versus NVIDIA, the AI peers are more expensive than NVIDIA. NVIDIA is going for very reasonable levels. And I want you to understand this through this short clip that I want to show you from a Morgan Stanley analyst. This Morgan Stanley analyst explains why NVIDIA is a good opportunity right now. So watch this quick clip. It's only going to be 90 seconds.
Where's the floor? Where's the bottom here? Is there one? And what do you think the fair value of this company really is?
Hi, good morning. So I think we're wrestling with a couple of things. We have this transition to Blackwell. And so your product Hopper, which is still driving the majority of revenues, is starting to slow down, as you would expect to see. And there's a lot of enthusiasm now for custom silicon or ASICs, as you've seen with Broadcom and Marvell. I think those things are weighing on the stock. I still think when you think about 2025 and AI, the story is Blackwell, the product cycle that NVIDIA has. I think they're going to have a huge second half of the year. And I think we do have these transitional issues as we're moving there. But I think the stock is very attractive at this level. I'm not going to say absolute bottom because it's volatile, but it's very attractive at this level. I think you're trading at a much lower multiple than some of the AI peers. And I really believe that they actually gain share versus custom silicon in 2025. I'm very excited for this custom silicon trend, but I still think NVIDIA can gain share relative to that in 2025 and has a very strong product cycle. We think the stock trades well north of 150 as we sort of move into that back half.
150 end of the year, meaning if we do the holidays again together, Joseph, that we're at 150 then, or 150 6 months out?
No, sorry, 12 months out. Yeah, we're our forecasts, our price targets are high 150s. I think at 12 months out.
At 150, what kind of multiple? What kind of multiple are you putting on that? 12 months out, yeah. Relative, and how would you compare that to maybe whatever you think the best comps are at this moment?
Yeah, I think we have a mid $4 number in 2025. We think north of $5 in 2026. I think those numbers are very conservative, and we've seen the stock in the low 30s kind of multiple range when there's periods of strong growth ahead of us. And I think we have that. The peers are now trading kind of more like high 30s when you look at where the Broadcoms and Marvells are trading on our estimates. So I think that's a very reasonable multiple. Now they have high margins, and they have these transitional issues that you're wrestling with. All of that can continue to weigh on the stock. We may continue to hear some data points about the older products manufacturing starting to slow down, but Blackwell's really robust, right. And the demand that they have is very strong. Yes.
All right, so what we just saw from this clip is basically 2025 is trending for an up market. That was the analyst's opinion from Morgan Stanley. He says 2025 is going to be fire. We've seen that from multiple analysts. And by the way, this is not rocket science, guys. The higher the stock goes, the better it performs. Other analysts realize that they are stupid for not being bullish on the stock. So I'm planning to see more and more analysts come out and say, hey, I'm also bullish because it's kind of like a cycle, all right? So when a bunch of analysts have a price target on Nvidia, 80 bucks, 75 bucks, and Nvidia's at 130, they have to change their price target. Otherwise, they look dumb. So they need to go up, and as more analysts go up, they start to copy each other. So this is a cycle, and I expect this to continue to happen in 2025. Now, we also saw the Morgan Stanley analyst mention that the product cycle for Nvidia is a little bit difficult with Blackwell. However, they do have a strong product cycle in general. So in 2025, we should see a lot more of that come to fruition. Now, the Morgan Stanley analyst did see the stock above 150. I think that is way too conservative. For me, I see the stock at $180 per share. And, if I'm taking a look at opportunities in the market that have the most upside for the level of risk, guys, it's not about just money, okay? Anyone can, buy a call option and take a huge risk and maybe get lucky. I'm not trying to maybe get lucky. I'm trying to get rich for sure. I'm trying to put you in the positions that are the most likely to build your wealth without, having any adverse effects. Because a lot of people can buy like really risky and high volatility stocks. Sometimes you win, sometimes you lose. That's not what I want. I want to win and put the most odds in my favor as possible. I'm trying to be a casino. I'm trying to put the odds in my favor so I can build wealth for sure. And when I do my one-on-one coaching with my students, I see a lot of success stories, especially right now. I have so many doctors, lawyers, engineers, pilots. These guys are making more money in the option market right now with my plays than they're making in their full-time job. So this is a no-brainer market to continue to build wealth. And I said this in a prior video. Let me tell you one more time because you need to understand this. If you make a lot of money right now, you are not going to care when there is a correction because it's like reaping a harvest. If you're going to be a farmer and you have a lot of fruits and a lot of veggies, all you have to do is pick up those fruits and veggies, freeze some of them for the winter. So when the tough times come, you can weather those tough times. It's as simple as that, guys. That's why right now, this is a huge opportunity and I'm building a lot of urgency for you to take action because I've grown my portfolio multiple 6 figures per month and you can do the same. I'm telling you. As you guys know, you can always hit the first link in my description. I do have some more spots in my one-on-one coaching, but let's continue on with the video because what I want you to understand is that AMD, I said, is a fantastic leap opportunity play. What you want to do is you want to purchase some leap options on AMD. Now be smart. You guys need proper risk management. You can't just dump all your money into a leap option and think, okay, my portfolio is going to go to the moon. No, what you have to do is put 3 to 5% of your money in AMD or into Nvidia. You need to have proper risk management. And it does depend on a one-by-one basis because if you have a bigger portfolio, then you should have less of your money in leaps. And if you have a smaller portfolio, then you can afford to take on more risk because you basically need more risk to leverage up your portfolio to have faster growth. So I want to conclude this video by saying that I agree with Tom Lee. And based on my own research, what I'm doing every single day, spending multiple hours on research, putting my students in the best place to make money, I agree with Tom Lee that this is a buying opportunity for almost every stock in the market that has pulled back, for many stocks in this market, especially AMD and Nvidia, especially the AI companies. However, I would be cautious right now on Adobe and Meta. What I'm seeing right now is there are some risk on the table when it comes to Adobe. I just don't see a strong support where a lot of investors are jumping into the stock. I see continued negative momentum. Same thing with Meta. I think there is some demand. Same thing with Meta. I think that this is a fantastic company, but in the short term, I see some weakness in the stock. So I would be careful with those two stocks. I would have, clear sight on the stocks that I mentioned in this video. And then the other companies that I've covered, I'm still holding. And I still have a lot of belief in this market. I think we're going to continue to make money hand over fist. I'm going to keep making those fruits and veggies, and I'm going to continue to freeze them for the winter because when tough times come, we take advantage. We take advantage of opportunities like this. So I want to encourage you guys to be smart. Don't panic. Don't sell. And understand that this is a long-term game where we're building a ton of wealth, and we're going to continue to build a ton of wealth if we play it right, okay? If we adjust to the market, if we understand the market, and most importantly, if we dollar cost average the high quality companies that are going for reasonable valuations. If you want to learn how to become a better investor and you actually want to scale up your portfolio, understand risk management, understand momentum, understand delta, understand all the things that I cover in this channel, make sure that you're subscribed to this channel as I'm going to continue to give you the best knowledge and level up your option trading. If you want a full option trading course for free, the best course on the entire YouTube, I actually have a 4-hour free course. I'm going to put up on the screen right now. You guys can check it out. I'll catch you guys in the next one.